I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver dealer specializing in customizing strategies based upon your goals. What a concept. Now, what I wanted to talk to you, we're going to do a little bit with headline news today. And I wanted to bring up what's happening in the IPO market because we called it when Uber came out and tanked. And the question was, are the markets now starting to demand valuation? Well, that has just proceeded along that course, and I would say, yeah, the markets are starting to look at valuations. But what's also happening in general is what we've been talking about. Now, what they want to say is this is not a recession. We're just going to have a little bit of a slowdown. But here's the problem with that. The stimulus, which is just enabling more debt, that's what the stimulus is. At least that's what it's been so far. We'll see what they do next. It is not working. And they say, well, yeah, it's not working, so maybe if we do more, it'll work. Insanity. But the markets really dropped off on very weak data, both in Europe as well as the US. And a lot of the key in that is we now have, here you can see, let me grab my little laser pointer, that the ISM, which is the manufacturing number, was below 50 in both August and September. So now we've got 2 months in a row with negative manufacturing numbers. In fact, the worst reading in a decade, what was happening a decade ago? Oh yeah, the crisis. Good thing we're not going to have a recession. You flipping kidding me? It really is a joke. And on top of that, they're counting on the consumer. So this just came out actually on the 2nd of October. September private payrolls report shows the pace of hiring is slowing. Oh yeah, they reported 135, rock and roll. But when they revised it, and frankly, who knows how accurate these are. But instead, August was down, so they lost 38,000 jobs. This is a problem because it's the consumer and their confidence that they're going to have that job, that they're going to have that income coming in, that will determine whether or not they'll make a longer term purchase like a house or a car or some other large purchase. And they're counting on the consumer everywhere. So they have to have that confidence, and it's a big problem. If they do not have that confidence, I thought I had more. Let me look. Nope, I guess I didn't. But if they do not have that confidence, then they're not likely to spend. And then, let's see, will it be a slowdown or a recession? Considering that everybody's is counting on the consumer, probably more of a recession. And I could do a lot of headlines, but we're limited on time. This, which was in the Wall Street Journal, yesterday, or on the 2nd, Americans buy cars with piles of debt. Shocker. And we do know that the auto industry, which really does employ a lot of people on a global basis, has been really in bad shape. In China and in India, I think it was one of those, I think it was China, where auto sales were down 42%, but India's, I don't think, was very far behind that. Booming finance, stretched out loans, so they're taking on car loans for a lot longer, are signs of middle class indebtedness. That goes back to the consumer. There's only such a level of debt that they're gonna have the ability to take on. And the other thing that I really wanted to show you today was what's happening in Hong Kong. Because of course you know about the protests, and that's tied to Beijing, etc. But this is really why those protests are so pivotal in a lot of ways, because they have the backing of older professional people, and that's really why if it was just the students, yeah, maybe not so much, but it's really everybody that is backing the youth protesters. You know, look, I'm going to be 65 in a couple of weeks. So, you know, I mean, am I really going to go out and march? I don't know. I mean, I might, but it's more likely that I'm going to be more willing to, you know, support. So what they're doing is they're going into these protests and they're with vehicles and they're actually taking them out and back and forth and supporting the protesters in every way they can. But it is the older, more professional generation that's doing it, and that is really, really key. It's not just the students. And Beijing is not happy about any of this, so we have to wait and see what happens, and let's hope that it can end peacefully. So that's it. Maybe, let's see, maybe I'll do one more. I mean, there are so many headlines. You know, another one that I think is really important is that lumber mills are cutting jobs as China demand falls. That's the lumber mills here in the U.S. Okay, a slowdown maybe. A recession? Yeah, I think so. And actually leading up to a reset. Because keep in mind, there is only one way to fight deflation, which is what a recession is. Okay, and that is with inflation. We've already seen the repo market is bringing out the QE guns. This is global, people. We are at a major turning point right now. Does not look good, but I'll be watching for you. And I will see you next week. So just keep in mind that financial shields are made of physical gold and silver. And until then, please be safe out there. Bye-bye.